Isn't it amazing to think that you're earning an extra $1,000 per month on top of your salary? Pipe dream, huh? Nope, it can be true for you. Hey everyone, Capital Finance here. This channel is committed to helping you achieve financial freedom. So today, we will look at a way for you to earn $1,000 of passive income through the stock market. Which stocks do you need to buy in order to earn $1,000 a month? It's easy to get caught up in the tangle of the stock market when thinking about investing. It's easy to get lost in all the charts. However, everyone understands that you may buy and sell stocks, but experienced investors utilize a different strategy to make lots of money. Warren Buffett gained $3.8 billion in cash a few years ago as a result of his 5 most significant investments. Take nothing away from the fact that the money he received was not the result of him selling his shares. However, these 5 corporations made a lot of money last year. They have to split their gains with Buffett because he is an investor. That's called a return on your investment. There were 2 categories of companies in the stock market: those that have matured and have successful and sustainable business strategies, and those that don't know what to do with the money they earn. Hence, they give it back to their shareholders. Reinvesting earnings is a strategy employed by firms like Tesla, which are still striving to make money. They may declare a profit, but the firm requires that money to continue to expand. So, here's a question that we will attempt to answer in this video. How many stocks do you need to purchase? Or how much money do you need to spend in the stock market to earn $1,000 from your investments every month without selling your stocks? But first, a few foundational concepts must be understood. What are dividends? Is there a list of the best dividend payers? And how can you prevent falling victim to the dividend trap, which might cause you to lose all of your money? Make sure to like this video before we begin with the first one. In a nutshell, what are dividends? Things have changed a lot since the dot-com bubble when it comes to investment. It used to be that investors only cared about investing in firms that made a profit and shared those earnings with them, as they were entitled to those profits as shareholders. It wasn't until the arrival of entrepreneurs like Jeff Bezos that things began to shift. If that means not paying a penny in dividends, that's fine with the company's founders and investors. A firm that is losing money and burning cash may be a horrible business, but the goal is to operate at a loss until you control the whole sector, at which point you will be able to turn a profit since you will be the only participant. Those are the 25 years of service Amazon has provided. However, despite its $1.6 trillion valuation, it never paid a penny in dividends to its stockholders. Since it was making a loss, it avoided paying taxes for over 2 decades. On the other hand, Walmart made $15.2 billion in net income and paid $2.16 in dividends per share. But Walmart was valued at little over a third of Amazon. Walmart appears to be a better option if you're looking for a steady stream of revenue rather than a long-term investment in Amazon. Such instances occur as evidenced by the stock market. Investing in dividend-paying IT firms is extremely rare. They want to reinvest their profits then pay you, especially the big ones. High dividends rate attracts newbies. Although dividend-paying stocks are enticing, they aren't always the greatest option. On the other hand, dividends might be used to deceive investors and steal their money. Depending on the state of the company, it might be on the edge of bankruptcy or barely able to function. One strategy to entice investors to buy its stock is to give substantial dividends, which have been declining every year. Examine the case of either UVV or the Universal Corporation. This company pays out 5.43% of its profits each year in terms of dividends. That's an out-of-this-world figure. It's pretty unlikely that you'll encounter something similar in the market. Even Apple, the world's most valuable business only distributes about 0.56% of its profits as dividends. However, I would not personally invest in this stock and would not recommend it to anybody else. Shares prices were at $50 5 years ago, and you might expect them to have increased significantly since then. But they didn't. The price plummeted to $43 because the company appears to have potential. It pays substantial dividends to maintain its stock appealing to investors because who knows where the stock price may be in a few years. For example, compare Apple's stock price increase of 337% versus Apple's dividend of 0.56%. There's a fine line between cash flow and principal loss. As a result, the stock market is plagued with them. So, don't buy a stock based only on its dividend yield. What are some of the best companies that pay fair dividends? Is there a decent company out there that is both expanding and pays dividends at a high enough rate? Yes, it is correct. Consider Coca-Cola, which has been around since 1886 and began paying dividends long before you were even born. Its dividend yield is a respectable 2.71%. However, even though the stock price hasn't been rising at the rate of some other businesses, it isn't expected to decrease soon. Another example is the Home Depot. They've routinely paid out a dividend yield of 2.53%. In the previous 5 years, the stock price has increased by a factor of 2. We know Johnson & Johnson as the king of dividends since it's been around since 1886. In the pharmaceutical sector, it's a well-known name. Developing a vaccine for the present pandemic will be difficult without it. When the vaccine became available, its stock price skyrocketed. Tech businesses are the exception to the trend since the belief is that reinvesting dividends would benefit the company's long-term growth. Because companies like Google, Facebook, and Tesla do not pay dividends, investors prefer Apple's stock above their alternatives. In both hardware and software, it is a high-tech corporation. Consistent financial flow is provided by a built-in ecosystem. As with other IT businesses, its stock price climbs in tandem with its dividend yield, which is roughly 0.56%. So, let us attempt to respond to the question, how much money do you need to invest in order to earn $1,000 a month in profit? We don't want to invest in firms that don't appear to be doing well in the long run. Therefore, we look for dividend yields that are different from one stock to another. We'll consider corporations like Apple, Coca-Cola, Johnson & Johnson, the Home Depot, and so on, which not only pay high dividends but are also expected to grow in the future. Since stock prices and dividend yields fluctuate during the year, it is impossible to calculate an accurate dividend yield. If you anticipate a yearly return of 1.5%, then your results will vary based on the specifics of your portfolio. You'll need to spend roughly $500,000 to get $1,000 of passive income, which will work out to about $1,500 a month, or $12,500 a year. And let's say you want to be able to retire comfortably on your dividend income, so you'll need at least $2 million in order to make $50,000 a year. The passive income you would receive from investing $500,000 in real estate, on the other hand, would be a lot larger than that of investing $12,500. Investors care more about the stock price than dividends because of this. Amazon's stock has soared 522% in the previous 5 years, even though the company hasn't paid out a penny in dividends. Investing in Amazon has yielded returns far above that of any dividend investor's wildest dreams. Isn't dividend investing a waste of time? That's not truly the case. Dividend stocks are a fantastic investment option if you have enough money in your portfolio to invest in a wide range of stocks. However, if you utilize these dividends to acquire more business shares, you'll end up with a solid investment in the long term. Home Depot's stock price rose 26% last year and gave out dividends of about 2.53%, making it an attractive investment option. With a tiny amount of money, like a few $1,000s, it may not be possible to buy a house and rent it out. Thus, dividend stocks may be an alternative for you. Again, make sure you're going to invest in a good company with impressive cash flows, rather than a company who is in a brink of collapse. So, that's it for today's video. If you like this topic, show some love and subscribe to this channel, and see you next time.